Good evening, all. It's Sunday night. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. A little bit about the market. It's been a very, very rough market. Wall Street firms came to the White House, interviewed on Friday, and they all said that March was a very rough month. Why was it a rough month? It was a rough month because we had a ton of news that came out. We've seen our deficit quadruple in February and March. Quadruple. We've seen spending plans that we've never seen before. We've seen new laws and new rules and regulations that we've never seen before. Government is now able to take over firms whenever they want to, financial firms whenever they want to, even ones that are not FDIC. We can see salary caps on CEOs and other people. There's quite a bit of a switch in the agenda right now that's unbelievable. Just tonight, New York Times reported that the Obama administration has forced the General Motors CEO to resign, and he resigned tonight. That's going to affect the market. It's not necessarily the fact that he resigned, but it's the fact that the government is getting involved in business. We're traders. That's what we do for a living. We would rather let the market, of course, do its thing, because the market for us is perfect. I've got full faith in the market. Otherwise, I wouldn't do what I do for a living. But anyway, so the market has been getting hit by different news on a daily basis. We've had news conferences on a daily basis. People are scared. Traders are scared. And they're scared of being short. They're scared of going against the administration. What that creates is lack of sellers. People that are long, people that own stocks outright, are not selling their stocks because the market is going up. People that are short are closing their trades before the day is over. Why? They don't want to be caught overnight without control on the short side. So what we're seeing is a market that bounces up in V-bottoms. Let me show you the NDX, the NASDAQ 100. And what's special about this is these. You can see that all the bottoms are basically V-bottoms. The market spends some time on the upside, spends time, falls apart, and swings back up. Spends time, consolidate, falls apart, and swings right back up. Those are V-bottoms, and those hurt. And the reason why they hurt is because they increase the likelihood of you getting stopped out. If you're long, those quick pullbacks can stop you out on the when they come down. If you're short, if you're actually trying to short it, those gap back ups are going to stop you out as well. Now, as a reasonable trader, what you have to see is you have to see what kind of hand are you being dealt. What are the market conditions? That is the most important thing in trading that I see. Is being able to read what kind of market you have. Is it a trending market? Is it a choppy market? It's the same thing as driving. You're going to vary your driving habits or your driving technique or your driving strategy as road conditions change. If you're going through a cone zone, construction zone, and there's cars all over the place and trucks and beeps and people with flags and so on, you're going to be gas brakes back and forth all the time. You're going to be very alert. But if you're catching a highway, then you're going to put the cruise control, you're going to put your feet up, you're going to turn the radio on, and you're going to take a nap while the car is driving for you. I'm joking about that. But you see, my point is that some road conditions are great for long distance driving, for relaxed driving, for high speed, and you take off. But some road conditions, you say, you know what, I'm just going to park at Starbucks, have a cup of coffee, and wait for traffic to die down because this is just too dangerous for me to drive. There's a blizzard, there's a rainstorm, it's just too dangerous for me to drive. And that's basically what we're seeing in the market. These kind of conditions where you see the market V-bottoming up, gap up, and every time it pull back. And I'll show you the same thing on the industrial average. You can see many of these pullbacks that are really, really hurting traders. Now, that's the market conditions. Yes, trades are working. Yes, we're making money on trades. Yes, we have trades that are going up 20%, 30%, 40%. It does happen. But on the way there, it's dangerous. Yes, you can get from point A to point B even though there's traffic, but it's just more dangerous than if there wasn't any traffic. So you kind of have to pick your battles. It's the same thing as playing poker. Yes, you can win with a pair of twos, but it's not going to be easy. It's not going to be safe. So what you do when you have a pair of twos or a pair of fives, you play a smaller hand. You don't bet as much. So it's the same thing in trading. We have to adjust our trading, and instead of trading 1,000 shares, we would trade 500 shares. We trade 300 shares, and we enlarge our stops a little bit, and we flow with the market, and we take a little bit more risk, but we take it on smaller shares, and that's something that's extremely important. Okay, what's going to happen next? This is a 60-minute chart, Dow Jones Industrial Average. You can see we've been very, very stretched to the long side, many attempts at the short side, and now we're rounding off. As a matter of fact, let me show you the S&P 500. I think it's a little bit clearer on S&P 500. You can see that this was a downward channel. We made a ton of money over here. This was great. Why? Because the market flowed. The market had ups and down, ups and down. Notice over here how straight the market is without any ups and down. And then, boom, breaks, and then comes back up, and then consolidates a little bit, and then breaks down and then comes back up. But what I'm looking at right now is the fact that our channel, we broke through our channel. We broke over here once, broke the 800, snapped back up. Now we are rounding off a little bit, breaking the channel to the downside, and looks like we might get a downtrend. The other thing I'm looking at is here's a top, and then all of a sudden there's a top. And if the next top is going to be a lower top, and that's what I'll be looking for, then it will be time for the short side again, which could be very, very interesting. If we give this back, there could be a tremendous profit potential in this move, and that's what I'm looking at. A couple of things. First of all, S&P 500 are down. Look, the futures are down pretty well overnight. I think it's because of the news. We have earnings seasons coming up. That's going to be very interesting for profits. We're going to get some serious momentum, and I'm pretty excited about that. We're seeing commodities pulling back a little bit. Oil pulling back from its highs, relative highs from the 50s, 54, 55, and then it's pulling back now, which is pretty exciting. Let me show you oil, crude oil. You can see that we are pulling back, and that's pretty good. Gold is pulling back, and that's pretty decent. By the way, this was the Geithner comment, was this. So pretty interesting. Anyway, we have a very different type of market right now, and we have to deal with it accordingly. Here's a perfect example. This is S&P Home Builders Index, and you can see the volatility. You can see the up, the down, the up, the down, the up. I'll show you the XLF, which everybody talks about right now. That's a financial. And you can see that we went straight up, and then we went straight down, and then we gapped up, didn't break this high, and now we're consolidating towards the short side. If we break towards here, we're going back down. If we break to the upside, we're going back up. I'll be looking to trade it whenever it comes, although I'm thinking that the bias is to the short side. Right now. I talked to you last week and we talked about the short side. Instead, we went sideways basically all week long. Anyway, it's going to be a very interesting week. Pay attention to the news. Pay attention to what the market is doing. Your key levels. These are what you have to watch. The S&P 500 to 800 level is what every trader is watching right now, and it's very, very important. Also, the high of this week was 832. So watch 833 basically. If you see the market, if you see the S&P 500, if you see on the quote screen or on CNBC, if you see the market breaking 833, then you know we're going up. If you see breaking 800, get ready for the short side. We're going back to visit our lows. Anyway, have a great week, and I'll talk to you either every night or next weekend. Take care.